Are you one of the millions of Kenyans who trust Equitable Bank with their hard-earned money? Or perhaps you're considering opening an account and are doing your due diligence. Either way, you've probably asked yourself the same question I have: is Equitable Bank safe? In today's world, where financial stability can feel like a tightrope walk, it's more important than ever to know where your money is and whether it's secure. We've seen banks around the world face challenges, and even here in Kenya, the financial landscape is constantly evolving. So, it's natural to be curious, even a little concerned. This isn't about spreading fear or creating panic. It's about empowering you with the information you need to make informed decisions about your finances. We're going to dive deep into Equitable Bank's financials, its regulatory environment, and the measures in place to protect your deposits. We'll look at the good, the potentially concerning, and everything in between. Let's start with the basics. Equitable Bank is one of the largest banks in Kenya, with a significant presence across East and Central Africa. It has a long history, growing from a building society to a fully fledged commercial bank. This growth and expansion are generally positive signs, indicating stability and ambition. However, size alone doesn't guarantee safety. One of the most important factors determining a bank's safety is its financial health. This involves looking at several key metrics. One such metric is capital adequacy. This measures a bank's ability to absorb losses without becoming insolvent. Regulators, like the Central Bank of Kenya, CBK, set minimum capital requirements that banks must meet. These requirements are designed to create a buffer against unexpected economic downturns or financial shocks. We need to check Equitable Bank's capital adequacy ratios against these regulatory requirements. Are they comfortably above the minimum? If so, that's a good sign. If they're close to the minimum, it might warrant closer scrutiny. You can usually find this information in the bank's annual reports, which are publicly available. Another crucial aspect is asset quality. This refers to the loans and other assets the bank holds. A high proportion of non-performing loans, NPLs, loans where borrowers are struggling to make payments, can be a red flag. These NPLs can eat into a bank's profitability and even threaten its solvency if they become too high. Again, the bank's financial reports will provide data on NPL ratios. Comparing these ratios to industry averages and regulatory benchmarks can provide valuable insights. Profitability is another key indicator. A consistently profitable bank is generally a healthy bank. Profitability allows the bank to build up reserves, reinvest in its operations, and weather economic storms. We need to look at Equitable Bank's profitability trends over recent years. Has it been consistently profitable? Are there any significant fluctuations that need further investigation? Beyond the bank's internal financials, the regulatory environment plays a crucial role. The CBK is responsible for supervising and regulating banks in Kenya. It sets rules and guidelines that banks must follow, conducts regular inspections, and takes action when necessary. This regulatory oversight is essential for maintaining stability in the banking sector and protecting depositors. The Kenya Deposit Insurance Corporation, KDIC, also plays a vital role. The KDIC provides deposit insurance, which protects depositors up to a certain limit in case a bank fails. This acts as a safety net, giving depositors peace of mind. It's important to understand the coverage limit provided by the KDIC and how it applies to your specific situation. Diversification is another important factor to consider. Equitable Bank has expanded its operations across East and Central Africa. This geographical diversification can be a strength, as it reduces reliance on a single market. If one country experiences economic difficulties, the bank's operations in other countries can help to offset the impact. However, international expansion also comes with its own set of challenges, including managing different regulatory environments, currencies, and economic conditions. It's important to assess how well the bank is managing these complexities. Now, let's address some common concerns people might have. One concern might be about the overall state of the Kenyan economy. Economic downturns can impact banks, as borrowers may struggle to repay loans. However, a well-managed bank with strong fundamentals should be able to weather these challenges. Another concern might be about cybersecurity. In today's digital age, cyberattacks are a real threat to financial institutions. It's important to understand the measures Equitable Bank has in place to protect its systems and customer data. This includes things like encryption, multi-factor authentication, and regular security audits. It's crucial to remember that no bank is completely without risk. Even the largest and most established banks can face challenges. However, by understanding the key factors we've discussed, capital adequacy, asset quality, profitability, regulatory oversight, and deposit insurance, you can make a more informed assessment of a bank's safety. So, is Equitable Bank safe? Based on publicly available information and the factors we've discussed, it appears to be a well-established and regulated bank with a significant presence in the region. However, it's essential to stay informed and monitor the bank's performance and the overall economic environment. Regularly checking the bank's financial reports, staying updated on regulatory changes, and diversifying your financial holdings are all prudent steps to take. This video isn't financial advice. It's for informational purposes only. You should always conduct your own research and consult with a qualified financial advisor before making any financial decisions. With that said, thanks for watching, and until next time.